Governments are just waking up to the fact that they have no input in terms of impacting Bitcoin whatsoever, and they're moving from thinking, oh, we're going to ban Bitcoin, knowing now that they can't ban Bitcoin, to understanding that it's fear of missing out, or FOMO. The countries that hoard and mine Bitcoin the biggest and the fastest are going to be in a much better position than the latecomers. That's the current position amongst various governments, except for in Europe, where they are literally brain dead, where the EU is coming out and making it clear that they're not interested in participating in the 21st century economy whatsoever.
Bitcoin and finance maximalist Max Keiser spoke in a recent interview about the effect regulation would have on Bitcoin by the US government. Max says this is a make or break moment for governments around the globe, as the crypto industry at large has too many working parts now to be stopped. Although Keiser does have a slightly different opinion than MicroStrategy's Michael Saylor on government regulation, only time will tell which of these Bitcoin bulls will show to be correct. We'll also hear his take on Elon Musk buying Twitter and what effect that will have on the space as a whole. This is Library of Wealth. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Well, it doesn't matter what any government says about Bitcoin, because Bitcoin is absolutely decentralized and exists entirely outside of any individual, group, corporation, or government control. Governments are just waking up to the fact that they have no input in terms of impacting Bitcoin whatsoever, and they're moving from thinking, oh, we're going to ban Bitcoin, knowing now that they can't ban Bitcoin, to understanding that it's fear of missing out, or FOMO. The countries that hoard and mine Bitcoin the biggest and the fastest are going to be in a much better position than the latecomers. That's the current position amongst various governments, except for in Europe, where they are literally brain dead, where the EU is coming out and making it clear that they're not interested in participating in the 21st century economy whatsoever. They died. The only thing, but they haven't been buried yet. So that'll come probably in 2022, because I noticed that the euro is going to be parity with the dollar and heading to new all-time lows, probably in the 60-cent region. So the entire EU can be flushed down the toilet, because the leadership there are bureaucratic, sclerotic morons. They can be just disregarded entirely. I think Elon Musk will probably buy France and turn it into a place that's worth going to.
Just side note, were you happy that he bought Twitter?
Sure,
You
why
love free
not?
speech.
Twitter was being manipulated by folks that were against free speech, and Elon Musk recognizes that free markets and free speech are part and parcel with vibrant capitalist free market economies, and he'll bring that to Twitter. And we're going to see a much improved Twitter, and I probably go public again in 2 or 3 years at 2 or 3 times the valuation he took it private.
Michael Saylor saw the announcement as a massive boost for Bitcoin adoption. So you're saying Bitcoin didn't need it?
I don't see the U.S. dollar, as Michael Saylor argues. I don't buy that argument whatsoever. So I'm not surprising that he would have a favorable disposition toward comments coming out of the U.S. government.
Keiser isn't surprised that Saylor holds a favorable position with the US government, because Saylor supports the dollar as the world reserve currency. Here's Max on why governments should not be involved, and why Bitcoin's longevity is designed to survive without intervention from any governing body.
I don't see that as being important or relevant either in any case, but he's a guy who supports dollar as world reserve currency. So, I mean, if it's his MO, that's fine. But I don't agree with it. And the Bitcoin is not in any way tied to any government's position toward it. Governments have only one decision: either start mining and hoarding Bitcoin or become irrelevant. You go from a unipolar US dollar reserve currency to a multipolar world with a few different currencies out there. So you have the dollar, which will be a fading currency. You have a gold-backed ruble, which is going to be aligned with China, Iran, Brazil, the BRIC nations. And then you have Bitcoin. So Bitcoin is being adopted by countries. We see that now in Central America with El Salvador. And we can talk about this new fund we're starting, by the way, in El Salvador called El Zonte Capital. You can get information about it if you do an email to hello@elzontecapital.com. And we'll see other regions in Central America and Latin America begin to adopt Bitcoin. And now we see more action in Africa. There's a country in Africa today that just announced they're making Bitcoin legal tender. So that will be a big theme in Africa. Those countries looking to leapfrog the entire fiat money system and banking system and just want to just leap into the 21st century, that they can just go to a Bitcoin standard and bypass all this malarkey.
As the US dollar deteriorates, Max believes in gold-backed currencies to operate alongside Bitcoin, as many countries are already on board with this framework. Another future for increased exposure that most financial advisors want to add to their clients' portfolio is the Bitcoin ETF.
With central banks and fiat money and all the bureaucrats, they can just go to a hard money Bitcoin standard and be immediately participating in the economics of the 21st century. So we're going to see that. So those are the three developments as the US dollar fades away. You get a gold-backed currency in those countries that have been aggressively buying gold for decades, principally Russia, China. Then you have Bitcoin, which is really the kind of the breakout surprise hard money transformative currency in the world, and that has its own dynamics.
Bitcoin fell to its lowest in 3 months Sunday. The Bitcoin price was around $33,050, down 3.8% over the past 24 hours. Now, this is the fourth straight day that Bitcoin has fallen. Early Sunday, the king of cryptocurrency dropped to $33,710, the lowest since January 24th. Now, if the price falls below $32,951, it would hit a new low since July of 2021. Bitcoin had stayed mostly between the $35,000 and the $46,000 mark for the past couple months, so the latest price drop could possibly mark the beginning of a new trend in the market. Price chart indicators were looking rather bearish late last week as Bitcoin's price broke below the 3-month rising trend line. Ethereum is also down 4.2% to $2,380, its lowest price since January. The raising of interest rates by the Federal Reserve 0.5 percentage point last week, as well as Wall Street responding with a stock decrease, crypto markets have also followed close behind, dropping more than 10% or almost $200 billion over the last week. Senior market analysts note that crypto markets had shown correlation to indexes like the Nasdaq. The tech index is down 21% this year, while Bitcoin is down 22%. Confidence seems to be low, and Bitcoin has been mainly consolidating for most of this year so far. Bitcoin always appears to get stuck in an uncertainty in the news cycle, and institutional investors will just have to wait for the calm on Wall Street, and then you'll see more people confident in investing. What do you think about Max Keiser's Bitcoin outlook for this year and the direction for the crypto market? Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.